Okay, so let's start. We want to start a new topic now. And our topic is called agriculture. So let me introduce it. Now, one of the terms we shall be using in this topic of agriculture, we call that term biological asset. What is a biological asset? But before we discuss what is a biological asset, of course you know, we want to discuss if you are a farm which is undertaking agricultural activities, you are an enterprise or an entity that undertakes agricultural activities, how do you prepare your financial statements? But before we look at the preparation, we need to look at some of the terms that I need to talk about. One of the terms I need to talk about, or we shall be talking about, is what are biological assets when it comes to agriculture. What's a biological asset? We normally say biological assets are living plants and animals. We define biological assets as living animals and plants. Living animals and plants that are used. Any living animals and plants that are used to produce a harvest, or what we call harvested produce, that is what we call a biological asset. So we define biological assets as living animals and plants, that are used to produce a harvest or harvested produce. So maybe we can put down that definition first. Let's put down that definition first. So the topic is agriculture. Put it down. Then accounting standard for it is IS number 41. Then below that you say this: biological assets are living animals and plants. Biological assets are living animals and plants. Biological assets are living animals and plants that are used for producing harvest, or harvested, produce. Biological assets are living animals and plants that are used for producing harvest or harvested produce. Of course, from animals you can harvest milk. From plants you can harvest things like coffee, tea, and so on. So we are saying any living animals and plants that are used in producing harvest or harvested produce, and that is what we call a biological asset. You have animals, have plants. Good. Now, you as an agricultural activity, how do you measure your biological assets? According to this accounting standard, you are required to measure. When you want to record them in the financial statements, you are required to measure the biological assets at what we call their fair values. You measure them at fair values less costs. Sale. You get the fair value of that asset, which is the same as market value, and you minus any cost to sell. In other words, you have an asset here, a biological asset. What is the market value of that asset? For us to realize that market value, what would it cost me to realize that amount? In other words, what are the costs to sell? So in actual sense, we are getting what we could call the net realizable value of that asset. So we value, or we are supposed to measure, all biological assets are supposed to be measured at their fair values less cost to sell. Maybe, listen, the fair value of that asset by the beginning, whichever it is, would be 50,000. Then by the end of the year again, you are required to remeasure your your biological asset again at its fair value less cost to sell. Listen, so if by the end of the year that biological asset has a fair value of 60,000, then that difference of 10,000 being the gain that you have made this year. You had a biological asset, could be an animal, whatever it is, had a value of 50,000. By the end of the year, it has another value of 60,000. That change in the fair value, which is 10,000, that is what you should take to the profit and loss of your agricultural farm. You take it to your profit and loss as an agricultural activity enterprise. So the change in fair value goes to the P&L. The change in fair value goes to P&L. So maybe we can also put down that information. So have another subheading, measurement as a subheading, measurement as a subheading, measurement of biological assets, measurement of biological assets, measurement of biological assets, measurement of biological assets. Then you say this: biological assets are measured at fair value. Biological assets are measured at fair value less cost to sell. Biological assets are measured at fair value less cost to sell. Biological assets are measured at fair value less cost to sell. Another paragraph. Any change in fair value, should be reported. Any change in fair value should be reported. Any change in fair value should be reported in the income statement. Any change in fair value should be reported in the profit and loss. Put it that way. Any change in fair value should be reported in the profit and loss. Profit and loss, or you can say the income statement. Okay. So that is what I can say for now before we continue. We now know what's a biological asset. We have said it is any living animal or plant that is used in producing harvest or harvested produce. Like I've said, from animals like sheep, you harvest wool. From animals like cows, you get milk. From chicken, you get eggs. From coffee plant, you get coffee beans. From tea, you get tea leaves. Those are the kind of produce that you can get. Okay? Then we have said, how do you measure your biological assets? Whether they are animals or they are plants, how do you measure them? The requirement is you should measure them at fair value. On initial recognition, they should be measured at fair value. And even at the end of the year, they should be measured at a fair value. And again, I've said the change in fair value is the one you take to the profit and loss. The change in fair value is the one you take, profit and loss. Good. Now, before we continue, let me explain something here. Now, there are some new students who are in this group. Or who are in class now, and they have not subscribed to my YouTube channel. If you are watching this and you have not subscribed to my YouTube channel, please subscribe. You may be watching now and you have not subscribed to my YouTube channel, please subscribe. Maybe you are new to the class. Yeah? Now, you can even subscribe as you are watching this video, just below that screen, there is a subscription button. You can click that subscription right now, and you can also click the notification bell. You can also click the notification bell so that you may be notified whenever we post new videos into the YouTube. You may be notified whenever we post videos into YouTube. Okay? So if you are new and you have not subscribed, please subscribe. That is to the news people who have joined us. Okay? Now to everybody, please tell your friends that we have online classes. Tell your friends that we have online classes so that if they would want to join, they can join us. Tell your friends that we have online classes for financial reporting, like the one we are doing now for intermediate. We also have online classes for advanced financial reporting of the advanced level. Tell your friends that we also have financial accounting for foundation level and ATD level 1 and ATD level 2. Okay? We have online classes for financial reporting every Tuesday, Thursday, and Friday. Tuesday, Thursday, and Friday from 8 p.m. to 10 p.m. That's the timetable. While for advanced financial reporting, we have early morning classes. You can tell them we have early morning classes, and we have evening classes. Our evening starts from 8 p.m. to 10 p.m. Our early morning starts from 5:30 in the morning to 7. 5:30 in the morning to 7. Now, if your friends cannot join the live class, you can also tell them that they can also buy what we call the pre-recorded videos. If you find, or if your friends cannot be able to join the live class, then they can also buy what we call pre-recorded videos so that they watch the videos at their own free times. Buy the videos for the whole syllabus so that they watch the videos at their own free time. For your friends who wants to join the live class, tell them either they are joining advanced financial reporting or financial reporting. Tell them that if they join now, they will still get the videos of the classes they have already missed. They still get videos of the classes that they have already missed. Currently, we are charging 4,200, and we also accept payments on installment. For any of these classes, if some of your friends wants to join us, they can call me on 0722 65 8875. 0722 65 8875. They can call me on that number. Then we can discuss how to pay and other details, especially the timings of the classes. Okay? Otherwise, this is just for everyone. That if your friends would want to join live online classes, tell them we have online classes for financial reporting, advanced financial reporting, financial accounting of ATD 1 and 2, and the foundation level of CPA. Okay, good. I think that's all I wanted to say. For those who have joined us, please, if you are new, I've said you subscribe. Click that subscription button so that you can get notification when you are posting new videos. Then for everybody, I've said, tell your friends that we have online classes for financial reporting intermediate, advanced financial reporting, and financial reporting. Good. Now, let me now continue with our topic. We have now discussed what's a biological asset and how it should be measured. Now, assuming you are an agricultural activity enterprise, that means you are a company that undertakes agricultural activities. How do you prepare your financials? How do you prepare your financial statements? Now, for purpose of preparing your financial statements, listen, you as an enterprise, you are required to classify your agricultural activities into 4 categories. for purpose of preparation of financial statements, all your agricultural activities should be classified into 4 categories. One, there is what we call livestock rearing, or that's number 1. Number 2, another category of activity is crop farming. Okay. Another category of activities for purpose of preparation of financial statements is chicken rearing. And number 4, we have what we call fish farming. So for purpose of preparing financial statements, you as an enterprise which undertakes agricultural activities, you are required to classify your activities into either you are doing livestock rearing, or you are doing crop farming, or you are doing chicken rearing, or fish farming. These are like our departments. Now, once you classify or categorize your agricultural activities into any of these 4 categories, listen, for each of them, you as a company, you are required to prepare for each of them, you are required to prepare what we call a revenue account. You prepare for each of them a revenue account. This revenue account will be used to determine what is the profit for each of these categories. That means it's like a department called livestock. You keep livestock. What profit did we make this year from our livestock rearing? If you are doing crop farming, prepare the account called revenue account for the crop farming to determine the profit that you made from the crop farming. Same to chicken rearing and fish farming. So for each of these categories, you are required to keep a revenue account, which is used to determine the profit or loss from that activity. Okay? Of course, you debit the expenditures, you credit the revenues, and the difference between the two will either be a profit or loss. If the revenues on the credit are more than the expenditure, that is automatically a profit. That is whatever. If the expenditures are more than the revenues, then of course it is a loss. So in general, we are saying prepare a revenue account. Listen, once you prepare a revenue account for each of the categories, then whatever profit you are getting, now you take it to, listen, you now take it to the general income statement of the company. You take it to the income statement now, the general income statement of the company, the general income statement of your company now, whereby, listen, now in the income statement, you don't show the sales, no, but instead come and identify the income. One source of income we have said is from livestock. What was the profit that you made from livestock? What was the profit that you made from crop farming? What was the profit that you made from chicken rearing? What was the profit that you made from fish farming? So it is those profits that I said you take them to the income statement or to the profit and loss. Listen, once you do that, now you come and minus the general expenses. Now you minus general expenses. Listen, these are expenses that were not related to either livestock, crop, farming, and so on. Why? Because I told you, when you are preparing a revenue account for a specific category, on the credit I said you put in the revenues, and on the debit I said you put in the expenditures. Expenditure is anything related to that department. If it's crop farming, what are the expenditures? Bought seeds, paid for planting, and so on. All the costs that you incurred in the crop farming, you charge them to the revenue account for the crop. Any expense you incurred in the process of livestock keeping, then we are saying charge that expense to the revenue account for the livestock. So the revenue account will also take in the expenses for that specific category. So what expense do you take? The general income statement. I have now said the general expenses, or the expenses you take to the P&L account, are the general expenses which are for the business as a whole. Example, the salary to the general manager of the company or the farm or the business. Remember, he is not specifically attached any of this department. No. Maybe you have other general expenses, whatever they are. Salary to the administration workers and so on. Any other expense that is not specific, that's what you charge the general income statement. Then once you do that, you now get the net profit, the business as a whole. Are you there? Good. Now, that is as far as the income statement is concerned. Once I prepare the revenue account for each of the categories, I take that profit to the general incomes. Then I minus the general expenses. Now, when it comes to balance sheet, listen, when it comes to balance sheet, you don't prepare balance sheet for a revenue department, livestock, crop farming. No. When it comes to balance sheet, you prepare balance sheet for the business as a whole. You prepare balance sheet, business as a whole. I've given you an overview of how you prepare the financial statements of a business which undertakes agricultural activities. Said for that business, they must classify their farming activities or agricultural activities into any of these four categories. And for each, they prepare revenue account. Used to do what? Get the profit. That profit will be transferred to the general income statement. The general income statement, once you have the profit, you minus the other general expenses. Then I've said for the balance sheet, you prepare one business as a whole. Good. So with that idea now, let's put down that summary information. Let's put down that summary information about what I've already said. So have another subheading, financial statements. Financial statements. Have another subheading, financial statements. Have it as a subheading, financial statements. Financial statements. Then you say this. Then you say this. For preparation of financial statements, for preparation of financial statements, for preparation of financial statements, comma, the farming activities should be classified. The farming activities should be classified into the following categories. Farming activities should be classified into the following categories. Into the following categories. Into the following categories. In case of loss, yeah, that's true. In case of loss, it's still a loss, which you can use. Listen, okay, you can still charge it as an expense. Whenever it's a loss, just like in a normal business, you recognize it among the losses. That means among the expenses. That's still one. Or you can still net it against the other profit. No problem. But it's still a loss. You recognize it as a loss. That's Doreen asking. Sawa. So you still recognize it as a loss in the income statement in case of a loss. Good. So I was saying this. The farming activities should be classified into the following categories. One, livestock rearing. Livestock rearing. But two, crop farming. 2, crop farming. 3, chicken rearing. Chicken rearing. Number 4, fish farming. Fish farming. Fish farming. Fish farming. Then you say this. Another paragraph. Another paragraph. A revenue account should be prepared. A revenue account should be prepared for each category. A revenue account should be prepared for each category. Stop, continue. It shows the incomes and expenses. It shows the incomes and expenses. It shows the incomes and expenses. And finally, the profit or loss. And finally, the profit or loss. Finally, the profit or loss. Another paragraph. Another paragraph. Or maybe you can put them in form of dash. Another dash. Let the first one, the revenue account, let it be the first dash. Maybe you can now put another dash. Then you say this, the profit or loss for each category, profit or loss for each category should be reported to, profit or loss for each category should be reported to the general income statement. 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 Another dash. A dash. All other expenses should be shown. All other expenses should be shown in the general income statement. 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 Another paragraph. Another dash. A dash. A statement of financial position. A statement of financial position should be prepared for the entire business. A statement of financial position, that's normally the balance sheet. A statement of financial position should be prepared for the entire business. Should be prepared for the entire business. Good. Okay. Now let me discuss a few things before we put down or before we do an example now. Let me discuss a few things. What we want to discuss now are what we can call special features. Let me first explain them. Special features in farming activities. Special features in farming activities. In farming activities. Let me explain a few of them, then we see how to account for them. You as an enterprise or a business, suppose you as the owner of the business, you provided, listen, as the owner of the business, you provided labor to the farm. Or maybe your family members, if they provide labor, of course you will not pay yourself like you pay the other workers. But remember, this is a business. But you as the owner and the family went to the farm and you provided labor like any other worker. How do you account for that? That's what we want to talk about. That's one of the special features we want to talk about. When the owner of the business provides labor to the farm, how do you account for it? I've said the owner will not pay themselves like they pay the other workers, but they still have to value that because these are business. They have to value that labor cost. They will still have to account for it. That's what we want to talk about now. The other thing is, if you as the owner of the business, you take something like, let's say, milk from the farm for personal use. Took milk, farm, for personal use. That means you took it to your family for consumption. How do you account for it? Remember, these are business also. Whatever milk. Or you could have taken crops from the farm for family use. That is what we call drawings. How do you account them? Or one of your workers, you told him, we shall pay you part of your salary by giving you some maize. That means you give workers maybe crops or vegetables as part of the payment of their wages. So they consume part of the produce. How do you account for it? Obvious, you are taking like you are paying them in terms of vegetables or crop that they are taking. Another thing we want to discuss. Listen, I have told you, these four categories are acting independent of each other. Because you must determine the profit from the crop, you must determine the profit from the fish rearing, you must determine the profit from the livestock keeping, and so on. But what if, listen to this now, what if you took maize stock that you had planted in the farm and you used it to feed the livestock? Remember, those are two different departments. Took the maize stock and you used it to feed the livestock. So it is like an output of the crop department. Remember, it's coming from the crop. And it's like an input of the livestock department because they are using it. Alternatively, what if you used manure from livestock to plant crops? You still have to account because these are business. So you used manure, watch this much. So manure is from the livestock. So it's an output of the livestock, but an input of the crop. How do you account for it? So those are some of the special features we want to talk about now. Let me go through each of them, how to account for them. The first one I told you, the owner or family members, they provide labor. How do you account for that? Told you, don't pay them, no. But you as a business, you must account for that value of labor. So you will take it by considering it as, whenever the owner provides labor, take it as an expense. That's one. It's of course a cost because he's providing labor. It's a cost. And then you credit capital. Meaning, it's like they are providing additional capital to the business because you are not paying them this amount. Maybe they had, during the month or during the year, they provided labor worth 5,000 or 10,000 shillings. So you take it as an expense, of course, then you consider that, listen, you consider that as a capital, an additional capital that the owners are giving to the company. That means they're increasing, through their labor, they're increasing the capital of the company. Okay? That's how you treat that. Take it as a wage, as expenses, which means in terms of wages. Then saying increase the capital. That's how we account for that. Labor provided by the owners, family members. So let's put down that. So the topic is, and the subtopic, special features in farming activities. 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 Number 1. 1. Labor provided by the owner. Labor provided by the owner, stroke family members. Labor provided by the owner or family members. Then you can say a small sentence below that. And say a small sentence below that. This should be considered as an expense. This should be considered as an expense as well as additional capital. This should be considered as an expense as well as additional capital. This should be considered as an expense as well as additional capital. Then maybe you can put down that double entry saying you debit expenses and you credit capital. Debit expenses and you credit capital. Expenses, we are taking it like wages. Yeah? That's number 1. Let's discuss the second special feature. Let's discuss the second feature. Put it this way. Consumption of farm produce. Consumption of farm output by owners. Consumption of farm output by owners, stroke workers. Stroke workers. Consumption of farm output by owners, stroke workers. Let me start with the owners because the treatment is different. I've already told you. Listen. If you as the owner, you took milk worth this much during the year from the livestock department for personal use, for family consumption. 1, it is already a drawing. That's one should remember. It's already a drawing. Now, if you are running a company, that should be considered as dividends. It's like you are paying the owners the dividend. You as a company, it's like you're paying them dividend. Then, that is, I've said, that is like dividend or drawings. So you debit, just like a normal sole trader, you normally debit drawings. Just like a normal sole trader, whenever it takes goods for personal use, you know we normally debit drawings. Then you now credit, listen to this now, you now credit, if, listen, I want you to get the point here, if the owner took milk, that milk came from livestock department. So livestock department will consider it's like they are selling to the owner that amount of milk. It's like they are selling. So livestock will say, we are giving this owner this milk, yes, but it's like we are selling them. So of course, saying livestock, listen, livestock revenue account will take that amount as a sale. If the owner took maize for personal use, then it's like the crop department was selling him that amount of the maize. So in the revenue account for the crop, that will be considered as a sale. Yeah? Good. So though we are not receiving cash, we as a business, but we take it like a sale was. Selling to the owner comes a drawing, and at the same time, a sale. But if it's a sale of the crop, maybe milk, take it from a sale of the livestock. If it's sale of crop, they are taking crop for personal use, take it as a sale of the crop. He took fish or chicken, personal use, take it as revenue from that specific source. Wherever the source is coming from, that which they took for drawings, that becomes a revenue to them. It's like a sale. Okay? Now listen. What about an employee now? Not the owner now. An employee. You, as a business, one of your employees took vegetables worth this much. Meaning, it's like you as a business, you are paying him in kind, not in cash now. You are paying him in kind, his wages. So if you gave him the crop, listen, if you gave him maize, for example, then that maize, listen, that maize came from the crop department. That maize came crop department. Are you there? So it is the revenue, it is considered as a revenue from where it is coming from. Considered as revenue from where it's coming from. Okay? If the employee works in the livestock department, then it becomes, listen, it becomes an expense at the same time, like a wage of that department. If the employee comes from the crop, so it becomes an expense of the crop because it's like the crop department paid him. Listen, it's like the crop paid him in terms of maize. But at the same time, this crop, it is from where the maize is coming from. So to the crop department, it becomes an output. Okay? So it also becomes a revenue to them. They take it like they are selling. Yeah? Good. So whatever the input, that becomes an expense. The worker is working in the crop department, take it as an expense of that, meaning it's like a wage. Yeah? If the employee is from livestock and you're giving him milk, it becomes revenue of the milk department and at the same time an expense in terms of wages of the crop, of the livestock, sorry. Good. See, if it's a livestock worker who consumes crop, then it's an expense of where the employee is working, works in livestock, comes an expense of the livestock. Like you are paying him in kind. Works in the livestock, let it becomes an expense, the livestock. We gave him maize. No, we gave him milk. Whatever. We gave him crop. So it becomes a revenue of the crop. So I hope you're getting the logic. I hope you're getting the logic of wherever it's coming from. I have said it becomes a revenue. If the employee works in that same department, it becomes an expense of the same. If he works in another department, it becomes an expense of the other department. But one thing is an expense in terms of wages and a revenue from the source where it's coming from. Good. Let's put down that number 2. Still under number 2. I don't know whether we had put down the first part of the honor Yes, I think so. Then you can say this. If, put another paragraph under number 2, if consumption is by farm workers, if consumption is by farm workers, e.g., if consumption is by farm workers, e.g., a livestock worker, e.g., a livestock worker consumes vegetables, e.g., livestock worker consumes vegetables. So, debit expense. You debit expense of which? You debit expense of which account? I've said this is a livestock worker who consumes vegetables, livestock. So it becomes an expense of the livestock. Put in bracket livestock. Then I've said it is vegetables coming from the crop. That's like a revenue, like they are selling. So you take it like a sale of what? Of the crop. You credit the sales of the crop. Hope you're getting the point there. So you take it to livestock account as an expense, take it to crop account as a sale. You can even say here crop account, livestock account. Just to mention clearly, you can put it livestock account and crop account. Good. That's the second feature that I wanted to talk about. Let's go to the third one and the last one. Third one and the last one. Which I said this, listen. Interdepartmental activities. We are calling them interdepartmental. Where I said crop like maize stalk used to feed the livestock, or manure from livestock is used to plant crops. That is what we are calling interdepartmental or inter-category activities. How do you account for them? Listen, I have said, wherever there's output, wherever it's the output, if it's that item is an output of the crop, then it becomes a revenue of the crop. If it's an input of the livestock, like maize stalk, that becomes an expense of the livestock. If you take manure, for example, it comes from livestock. That becomes a revenue to the livestock. But it's an input in the crop. That becomes an expense of the crop. Yeah? Whenever you have inter-category activities, you look at where is the item coming from. That's a revenue. Where is it going into? That's an expense. Good. Let's put it that way. Number 3. Number 3, transfers within. Transfers within farming activities. Transfers within farming activities. Transfers within farming activities. Transfers within farming activities. Then you can say this. Transfers within farming activities. Then you can say this. So that the output of one farming activity, may be used as an input. The output of one farming activity may be used as an input, of another farming activity. of another farming activity, e.g., crops harvested, e.g., crops harvested, used as, e.g., crop harvested, used as livestock feed, used as livestock feeds. Crops harvested, used as livestock feed. Then another paragraph, sema hivi, they will be considered as an income. They will be considered as an income, of the farming activity. They will be considered as an income of the farming activity from which, considered as an income of the farming activity from which they are considered as an output. Will be considered as an income of the farming activity from which they are considered as an output. And, continue, and as an expense. And as an expense. And as an expense in the farming activity, as an expense, and as an expense in the farming activity where they are considered as an input. Where they are considered as an input. Where they are considered as an input. E.g., crops used as livestock feed. E.g., crops used as livestock feed. Then you debit expense. You debit expense of what? We have said, e.g., crops used as livestock feeds. So it becomes an expense of the livestock account. That's an expense. And sales of crop account. Good. I think I'm through with the three main activities that may be challenging when you are given a question on agriculture. How to account for those special features. Finish, I want to talk about how do we prepare a revenue account. I've just said that for each farming activity, whether it's crop, livestock, fish farming, or chicken rearing, for each you must prepare a revenue account. Finish, I want to talk about how to prepare revenue account now. Finish, I talk about how to prepare a revenue account. Okay. So allow me to talk about how to prepare a revenue account for one of the activities. Otherwise, if you know how to prepare for crop, you should know how to prepare for livestock. The same concept. Concept is the same. Okay? Let me for now, don't write this for now. Let me for now show, like I want to prepare a revenue account of the crop account or the crop department. Let me now go through. Now listen. You will start with what is the opening stock. What was the opening stock of anything? Listen, of anything that was there by the beginning relating to crop farming. Could be, listen, there was already some growing crop by the beginning of the year in the farm. what was the value of the growing crops? Whatever. Get the value. That's an opening stock. Could be by the beginning of the year, we had seeds. By the beginning of the year, still for crop. Maybe by the beginning of the year, we had fertilizers. Whatever it is. And any other thing, listen, relating to crop that was there by the beginning, we consider that as an opening stock. Don't put down. Let me first discuss how to prepare revenue account. Good. From there, you come and also debit purchases. Any purchases you made during the year relating to crop. Maybe you bought more seeds this year. Maybe you bought fertilizers. Whatever you bought that relates to crop, put it there. If you are preparing a livestock account, maybe you could have bought some more cows this year. Yeah? Maybe you could have bought anything that relates to livestock. Yeah? Good. Listen. Then from there, come and list the expenses of this department. Wages. Maybe in cash. Wages. In kind. Like you gave, listen, like you gave milk to an employee who works in crop. You gave milk to an employee who works in crop, that's a wage in kind. It becomes an expense of where that item is. That is here. Assuming you paid or you gave milk to one of the crop farmers. So the crop takes it as an expense. Milk, which is an output of livestock, will become a revenue of livestock. Yeah? But we are saying any expense relating to crop. Yeah? That's what we are saying. Listen, other one could be manure. You, as a crop department, you used manure to plant your crop. That came from livestock. Told you it becomes an input of the livestock, of the crop, sorry. You, as a crop department, take whatever is the cost of the manure as an expense to you. Okay? Whatever it is. So we are saying any could be whatever other expenses that are related to that. Good. Listen, on the other side, you come to sales. How much did you sell during the year? Maybe maize. You sold for this much. Beans. Sold beans for this much. All these are crops. Okay? Now listen again. I also told you. Listen, if there are any drawings for family consumption, family took maize, personal use, that I said is a drawing. Told you debit drawings, credit sales. You come and say here drawings for family use. Whatever it is. Maybe they took maize or beans for family use. Yeah? That's what we are saying. Listen. You as a crop department, you gave maize stock to the livestock. So we are saying any maize that could have been given to the cows as their feed, that's obvious. And even say here maize for livestock. That is an output or a crop. It was an input of the livestock. If I was to prepare a revenue account for the livestock, that amount I'll show it as an expense. But for the crop, that maize that was used for livestock feed is considered as revenue. Good. And any other. Get this actual sales of the crop, or if it's revenue, or if it is livestock, how much cows you sold and so on, milk, so on. And if there was any other source, milk given to workers and so on, those are all drawings. Okay. Once you're through with the sales, now listen, you now come to closing stock. On this side, come to closing stock. Show the closing stock by the end of the year of anything relating to crop. Could be just like an opening stock we had some growing crops that by the end of the year are still in the farm, which have not been harvested yet. Growing crops. Yeah? Then you can have harvested crops. Maybe by the end of the year, we still have some harvested crops that are in the store. Yeah? Maybe by the end of the year, we still have seeds that are related to crop. Maybe by the end of the year, we have fertilizers in the store. Okay? Once you do that, now listen, I'm through with the revenue account. Now you get the balancing figure. Get the balancing figure in this revenue account. That balancing figure will either be the profit or loss. If the difference is on the debit side, we have said it's profit as a balancing figure. If the difference is on the credit, then it's a loss as a balancing figure, whatever it is. That's how we prepare a revenue account. You will do the same for the other departments, so on. Now listen, for most of your questions, you find that you are given maybe 2 activities, not all of them. But I've told you, the purpose of preparation of the financial statements as a farming enterprise, you have to classify your farming activities into any of those 4. For exam purposes, sometimes they only give you 2 activities: crop and livestock, crop and livestock, crop and livestock. Yeah, good. So let's put down this format now. So andika hivi, another subheading, revenue account. Put down a subheading, revenue account. Put down a subheading, revenue account. As a subheading, revenue account. Revenue account, and then you say this: for each farming activity, a revenue account is prepared. Each farming activity, a revenue account is prepared. A revenue account is prepared to determine the profit or loss. To determine the profit or loss from such activity. To determine the profit or loss for such activity. Other paragraph. The following is the format. The following is an example. Put it that way. The following is an example of the format. Following is an example of the format of a revenue account. Following is the format of a revenue account for the crop farming. Crop farming. The crop farming. Following is example or the format of a revenue account for the crop farming. So I think you can now copy this. I don't need to delete anything. Just copy that. Left side on debit, we start with the opening stock. I have said go through the question and identify any opening stock that relates to the crop. Could be growing crops, could be seeds, could be fertilizers, whatever it is that was there by the beginning. Then you come and adding purchases of anything relating to crop. Here we have just assumed seeds, fertilizers, whatever it is that the question will give you. Then from there, still on the debit, tumesema expenses relating to the crop. Expenses relating to the crop. Expenses relating to the crop. We have given wages in cash, wages in kind, newer, and any other. Of course, any other. Expenses like wages in cash, wages in kind, newer, and any other expense. Just giving a few items to show. That's all on the debit. That's all on the debit. So finish. We want to go to the credit side. Want to go to the credit side. Want to go to the credit side. Of course, on the debit, there's that balancing figure. I'm saying profit. I can even put it so that when I show the other side, you will have finished on the side of the debit. Last item on the debit where there was profit as the balancing figure. Let me now show the other side. I hope you are through with the copying the debit side. So on the credit side of the revenue account, we have the sales. We are assuming the sales of maize, sales of beans, whatever it is that you sell, you sold from that department called crop. Then I told you any drawings for family use, maybe maize for livestock. Maize is an output of the crop. Revenue to them will become an expense of the livestock. Finish. After you're through with the sales, you now go to closing stock. Closing stock, again, you identify any item relating to stock, crop, by the end of the year that has still remaining in the business. In terms of examples we have given, growing crop by the end of the year, harvested crop by the end of the year, seeds by the end of the year, and maybe there are still fertilizers relating to planting. Okay, that's what we are saying. Once you're through with that, now you go to the balancing figure. That balancing figure will be a loss if it's on the credit side. So we are through. Hope you are through. We are through with all that. Okay. Finish. I want to say one or two things. Finish. I want to say one or two things. Okay, now listen, if you are through. Sometimes you may be asked by a question which you have been asked before in your past papers. Listen, for these biological assets to be recognized in the balance sheet, what are the conditions for a biological asset for it to meet, for it to be recognized in the balance sheet as a biological asset? That means for a biological asset or an asset to go to the balance sheet, what characteristics must it have, or what should it have? Listen, three things for a biological asset to be recognized in the financial statements. Number one, listen, let me first explain. As an enterprise, for you to recognize it as your asset, you should have control over that asset. For a biological asset to go to the balance sheet, one of the features you must have is that as an enterprise or as an entity, you should be owning that asset. You have a right to control the asset. That's number one. Two, that must be an asset from which you as a business, you expect to generate some economic benefit from the asset in the future. Have an asset. Is it going to give us any economic benefit? Are we going to derive? It should be a resource from which we should be able to derive some economic benefits in the future, like cash flows in the future. It will give us some cash flows. That's number two, that there should be some value that we shall derive from the use of that asset. That means there should be economic benefits that will be derived from the use of that asset. Three, listen, for an asset to go to the balance sheet as an asset, then third condition is that the value of that asset should be reliably measured. In other words, as a business, you can be able to measure the value of that asset. Those are the three conditions that I've seen. Questions ask you, what are the conditions that a biological asset should meet for it to recognized in the financial statements? One, I have said, as an enterprise, you must own it. Ownership. In other words, you must be able to control as yours. That makes it an asset. Two, said, value. You'll be able to recognize economic benefits from that usage of the asset. We should be able to derive some benefits from the asset. That's value. It should give us some value which we can derive. Three, measurement. You should be able to measure the value of that asset with reasonable certainties. That means the value should be measured. Okay? So have another subheading. Have another small subheading. Have another small subheading. Recognition of biological assets. 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 Then you say this. IS number 41. IS number 41 specifies. IS number 41 specifies the tests. That's the normal tests. Identify the tests in order. Identifies the test in order for a biological asset. IS number 41, sorry, specifies the tests in order for a biological asset to be recognized. To be recognized in the statement of financial position. Or just put it in the balance sheet. Identifies, I've said, or specifies, IS number 41 specifies the test in order for a biological asset to be recognized in the balance sheet. Recognized in the balance sheet. Number one, control. That's the key word there. You should have control. Then you put a dash. Control. Control. Then you say this. The enterprise must control. The enterprise must control. Enterprise must control the ownership. Must control the ownership. Control the ownership, i.e., the enterprise should have ownership. Enterprise should have ownership. The enterprise should have ownership or right of control. Enterprise should have ownership or right of control. Enterprise should have ownership or right of control. Number two, value. That's another keyword there. For an biological asset to be recognized in the balance sheet, what should have? Ikaivi, put a dash. There should be future economic benefits. Future economic benefits. Future economic benefits expected to be derived. There should be future economic benefit expected to be derived from the asset. Should be future economic benefits to be derived from the asset. From the asset. Number three, another thing that should have, that asset should have, measurement. Measurement, the dash, put a dash. The fair value of the asset. Fair value of the asset. The fair value of the asset should be reliably measured. Should be reliably measured. That means you can be able to get the fair value without any doubt. So if that asset has those three features, then it makes it to be recognized as an asset in the balance sheet. Any biological asset for it to be recognized as an asset, one, you should have control. Two, you should be able to derive some economic benefits from that asset. Number three, you should be able to measure the value of that asset reliably. That's important. Yeah? Good. Now what we are remaining with is to do a few of the past papers. We can now do a question from the past papers. But because of time, seems we can't do a question now. Because of time, we can't do a question now. Maybe for today we can stop there, pick it up from there next time, where we shall do a question now. But just to remind you, we have said, if you are new to this class and you have not subscribed, please subscribe our YouTube channel. Click that subscription button and subscribe. Yeah? Good. Two, said, please tell your friends that we have online classes. Financial reporting is what we are doing of the intermediate level. Advanced financial reporting of the advanced level. I've said for advanced, we either have early morning or evening. For financial reporting, it's only evening. Then we have also for financial accounting. That's what we have said. Told you, if your friends cannot be able to join any one of these live classes, I told you they can also buy what we are calling pre-recorded videos, where they get the videos for the whole syllabus and they watch them at their own free time. Good. Also say, if any one of your friends is interested, let them call me on 0722 658875. That is the number. They can reach me. We can talk. See, currently we are charging 4,200 for the whole semester, whether it is live or pre-recorded. I've said we also accept payments on installments. We accept payments on installments. That one we have said. Okay. I also said, in case a student will join now, they will still get the videos of the classes they have already missed, and still get the videos of the classes they have already missed. Okay. Good. See you next time. Maybe one more appeal to everybody now. If you feel you have understood the class for today, please like that. Click that like button. If you feel you have understood the class for today and you have understood it well about how to do the financial statements of an agricultural activity enterprise, like the class, you can click that like button. Click that like button to like the class, like the video. See you next time. Please like the video by clicking that like button. See you next time. Now where we shall do a past paper question from your past papers on this topic. Otherwise, bye for now. Bye for now. See you next time. Bye for now. Okay. But remember to subscribe if you have not subscribed. Bye.